That kinds of brings us to the next topic from something which was mainstream macro investing, fixed income markets, to something which is emerging, or rather a small niche opportunity in India: green bonds. See, we have been seeing a lot of discussion on ESG. We have been seeing a lot of discussion on sustainability. We are seeing discussions on the climate, the global warming, climate change, and things like that. And that's where this session fits in. We have Sandeep Bhattacharya moderating this session on green bonds and the opportunity in India. Sandeep is part of Climate Bonds initiative. He is responsible for coordinating their efforts to drive the development of Indian green finance. He's also part of Climate Bond Initiative's communication and media engagements in India. Sandeep has more than 15 years of experience related to bond markets in India and Southeast Asia. His roles has been across credit evaluation, business development, execution, and transaction structuring. Over to you, Sandeep.
Thanks, Vijayanand, for giving us this opportunity at this wonderful place and in this wonderful forum. I have with me two very esteemed co-panelists whom I will introduce, and the flow of the webinar would be such that subsequent to the introduction, we will do a bit of some presentations, and there will be a question and answer session with the co-panelists. So I have my co-panelist Simi Serene, who's currently the director at Unitas Capital, where she leads the debt advisory practice and helps financial services firms, social enterprises, and climate tech businesses to get access to relevant timely capital from large global network of domestic and international lenders. Simi is a chartered accountant and an MBA from London Business School, and she is also a co-founder of Climate, which is building a growth platform for early stage climate tech startups to access capital markets and innovative financing options. I also have with me Mr. Chandru Badrinarayan, who is an alumni of the INSEAD Business School and has experience about 35 years across many sectors. He is a member of the technical working group on regulations constituted by the Ministry of Finance to draft the sustainable finance regulations for India, and is also a part of the Global Policy Reference Group of UNPRI, a global association of investors, asset managers, and other stakeholders focused on furthering sustainable investment across the world. Among his various positions has been the managing partner of eCube Investments, the India business head for MSCI, and a senior director at CRISIL, a S&P owned company. So to keep on with the flow of this thing, I will give a little bit of introduction to what green bonds are and where we are, where the globe is, where India is headed. So I'll use a few slides and I'll just share the same. Yeah, just give me a moment. Yeah, so here we are. So a very quick introduction to what is a green bond. It is just like any other bond, but it's a green bonus feature that makes it a bit unique. And it's about the projects and the assets, not the issuer. So the issuer can be a company which is not necessarily totally environmentally friendly, but it must have some assets which are green. So the proceeds of the money is used for green projects or assets. So if we want to illustrate it a bit visually, then you have this so-called Venn diagram, and you have the regular bonds and the green bonds. And what is overlapping is the normal features of the bond, which is the yield, maturity, credit rating, bond price, coupon. And what is outside, is especially for green, is a commitment to a particular mission, and that needs to be green. So what does this do? So it is helping in shifting the global financial markets, more precisely the debt markets, towards climate mitigation and adaptation requirements. So this number is slightly dated. It's around 128 trillion bond market now, which investors are seeking yield. We have fairly low interest rates, and you have an investment commitment of trillions of dollars towards making the shift towards a green economy, which is defined by many things, among the IEA, the 53 trillion to be done by 2035, to make sure that we are onto the close path to minimum warming, and a few others. So what has been the experience till now? 2021 seems to be a breakout year, and this is some projections. So it's been a steady growth as we can see. When it started around 2009, we don't cover it any longer. And like prolific things, it has given birth to some daughters, which we refer to as daughters, called the sustainability bond, social bond, pandemic bond. These are slight variations in what the use of proceeds is. And we also have something called sustainability linked bond, which are KPI linked, but there's no restriction on the use of proceeds. Now, what has been the trend in India? We have had an early peak in 2017. This was more of public sector driven issuances, this 2016, 17, and even 18, to stimulate the market. And in 2021, we have overcome that peak by a large distance. This is more private sector driven. So basically the market learned for a while what are the tricks of the trade, who are the investors, how do you invest, and then here's a breakout which is going on without tremendous amount of policy support any longer. These are mostly private sector issuers in 2021. However, if you look at green bonds and its daughters for India, 2021 has been a really big year, and we'll possibly see volumes above $10 billion. I'm in touch with an issuance which is around $160 million, $180 million, which if it comes will easily cross the 10 billion mark. So as we see, 2021 has been quite, in terms of volumes, a breakout year. But I also need to mention that out of this whole cumulative amount of maybe close to $20 billion, more than 90% of the use of proceeds is from offshore bonds. And why offshore bonds? Because the driver of these bonds seem to be that there is capital in the West, which is dedicated to green bonds, and therefore, to be invested in green issuances, which drives down the price, creates the competition. So this was a little bit of introduction before we get into the question and answer session, which I will start with Simi. So behind the billions, which we just discussed in the bond issuances, there is a lot of activity which goes behind the large issuances in terms of transactions which build up the portfolio. And Simi has been deeply involved in the same. So understand that there's not much of a debt capital market dedicated to social and green causes. But Simi, what has been your experience? There's not much of dedicated green capital in the country, but where is it going? And especially in equity, what are you seeing, Simi?
Sure, Sandeep. So essentially, you're right. I think India does need a lot of capital to meet its climate goals. And while there has been some capital coming, we are still far short of what we need. So just to, quote some numbers, Sandeep, when we did our first State of the Climate Finance report last year, we estimated that India is going to need at least $900 billion until 2030. To meet its climate action goals. And now with COP26 and India making the net zero commitment, we believe the number is going to be far higher than that. So at least 100 billion a year is what's needed. The actual number, is that actually coming into green capital is potentially much lower, not more than 20 billion is our estimate is. What's also, important is that so far, I would say up until 2020, most of this capital was coming into renewables. And I think that's true for green bonds as well, Sandeep, that, most of the capital comes to either solar or in case of Indian Railway Finance transportation, but it's essentially meant for renewable infrastructure building. We are seeing that starting to change this year, at least when it comes to equity commitments. So two new sectors have emerged as investor favorites this year, both related to climate action. The biggest one has been electric vehicles. where we are seeing investment commitments of as much as 3 billion this year. It's still far short of, say, 180 billion that we need until 2030, but it's emerging as the largest equity sector for the year. The other sector that has attracted a lot of investor interest and is very important from climate action perspective, both for mitigation and adaptation, is agri-tech. So we have seen almost close to $1 billion in investments come into agri-tech this year. I would admit most of that has been in tech plays. So essentially some kind of tech platforms that essentially add value to farmers or supply chain. But that's an important first step in building sustainable food supply. From there on, we obviously, the next step is to build, I would say, more infrastructure around farm gate automation, around cold storages and whatnot. But we've seen a first step happening in terms of agri-tech investments. So these two have been the most active segments from an equity perspective. I would say from debt perspective, renewables still continue to be the largest segment. So we're still seeing the most activity happening in solar, both from a utility scale and rooftop solar perspective. Even EVs at this point are too early. There are debt investors who are interested in the segment, looking at the segment with interest, but it's probably too early for them to do large transactions at this point of time.
Okay, you did mention about renewables and the solar as the two segments, the utility scale and
rooftop.
The rooftop, and you might even consider the corporate PPAs as clubbing with the rooftops more than possibly the utility scale.
Yeah, I would club the open access corporate PPA as the commercial industrial market, essentially.
Yes. So what's the differentiating feature between the three? I mean, the utility scale seems to be a bit different from the other two, is it? Or how do you see it?
Yeah, so apart from the sheer scale, right, that utility scale projects tend to be much larger and have attracted a lot of capital early on. I think in terms of growth, C&I, commercial and industrial, is of far more interest to us today. I think the big difference, Sandeep, at this point is the credit quality. Utility scale, as much as the scale it has achieved, is also suffering from the distribution company discoms having variable credit qualities, right? So there are issues around payments, issues around delays that the project developers are facing. On the C&I segment, I think we are solving it by restricting finance to some extent to highly rated corporates. So at this point, I would say all the commercial industrial financing is happening to off-takers or buyers of power who are rated at least BBB, but in most cases at least rated single A, which means that they have good credit quality and are not expected to delay payments. I think that is a defining feature of the market at this point of time that is driving most of the new installations.
I see. That's quite interesting. So, within the segments, say the EV has, an extensive value chain, and even within, say the distributed or rooftop or even the C&I, there are a few business models, Resco and on that. Where do you see which are the ones which are coming, and where should we see a fair more traction?
Sure, Sandeep. So I think especially from a green bonds or a capital markets perspective, right? I think what we look for is which sectors can build volumes, right? And in the way you look at climate finance, so I look at the evolution of any segment at 3 stages, right? The first wave is when you're bringing in lots of equity to drive innovation. And then as the segment starts to stabilize, you essentially have companies needing more working capital to grow their businesses, to grow their operations. And then the final stage is when it's a stable segment, as rooftop solar or solar is today, when you have the economics worked out and you start building uniform asset portfolios, right? And that's a stage where you start thinking, okay, can I then build 10 million or 20 million or 100 million portfolios that I can securitize or issue bonds against, which is what you're seeing in renewables today. I think the segments of interest to me, I would say for the next decade, I always said EV is something that's of a huge interest to us and to the investors because there is, I would say, once we agree on what charging infrastructure should look like and how and who is going to pay for it, which will happen once I think we are past this first wave of innovation funding and people start building scalable business models, there is room to fund sizable fleets of vehicles for transportation as well as charging infrastructure. Now, that is the most obvious next segment to open up. I think the less obvious ones and which probably will take a couple of years to materialize, but I think are very interesting when we have investor conversations. I think waste and circular economy is something that investors are really interested in. Now, Sandeep, you and I both know that we are working on India's first waste bond. I know we can't share too much details at this point of time, but we have equally, interest and inquiries from both the investors and waste management companies, because they are the ones who have to build infrastructure, right? To segregate waste, to process waste, to create, new materials out of whether it's plastic or batteries or whatever they are recycling. And there is interest to fund that infrastructure, which is clearly a green infrastructure. That's one. I think the other one where very little work has happened so far, but we think is a huge growth segment, is green buildings. Now, every data shows that India is becoming more urban, and we probably are yet to build at least 60% of the building stock that will exist in 20 years' time, which means that there is scope to do more efficient, more green construction, and essentially to raise funding for that. So I think these two segments, circular economy and green buildings, I would say beyond EV are the ones that I would be most focused on in terms of growth sectors for debt.
Yeah, I have one or two things about the circular and the green building. So the circular economy, while we might be talking about it now, there are companies which have gone through, say, 2 or 3 rounds of capacity addition. So a lot of the companies are fairly established, while there are some greenhorns and would-be unicorns possibly there. And green buildings, there's a conundrum that while India is number 2 in terms of square feet of green buildings after the US, there's hardly any capital market linkage. Yes. Possibly there's something to discuss in some other forum. There are many reasons why it is so, but this is quite a conundrum. The various councils keep on saying, oh, we are number 2 after the US, and but then somehow the capital markets, either they're not interested or the owners are not interested or whatever. There's quite something.
I completely agree, Sandeep. I think, which is why I think, as I said, this is still a couple of years away, because there are problems we need to solve in how the markets are structured and how the assets are structured before we get to a capital market solution. Yeah. But which is why I think the other emerging segment, actually, which is of super interest to me personally, is the climate fintech. Because all the problems we talk about, right, that we don't have standard assets, we don't have standard contracts, we are seeing fintechs trying to solve that, right? We're now seeing the emergence of asset management companies that are using leasing as an option and crowdfunding as an option, right? And as they start to grow bigger, they will just naturally end up having large pools of assets, which while may not have been capital market ready by themselves, but because they're part of a managed pool, could be capital market ready. And which is why I think climate fintech is something that I believe could be the push that we need to move from very esoteric, DFI-driven funding for areas like farm automation or agri or green buildings to a capital market instrument.
So among these fintechs, there seem to be plenty of companies leasing EVs.
Yes.
What do you feel about them? What's your feel about this leasing companies for EVs?
So as you said, there are like many of them doing it, right? So I think the ones that will scale, I think are the ones that are solving basically the problem that today exists between a mainstream vehicle finance company and an EV company, right? So why is asset funding so hard for climate, right? It's not that asset funding is hard itself. Asset funding has been a mainstay for our financial markets for a long time. We fund everything from MRI machines to cars to, servers to office equipment. The reason climate asset funding has been hard is because, apart from the fact that it's new and untested, is that how do you put a value on the asset, right? So once you repossess the asset, how much is it worth? Is there even a market for it? So I think the ones who will be most successful are the ones who are creating that market, right? Who are saying we will manage a pool of assets and we will essentially take the risk for creating that secondary market of valuing those assets and finding who the next owners or users of those assets will be. So I think that is the missing link today in the climate asset market. And the more successful out of the 30 or 40, 50 asset leasing companies we know today in the EV market will be the ones who kind of think of it as an ecosystem building play, not just we are a leasing company play.
I see. That is quite interesting. So I believe there will be a lot of queries from some people who are watching about what all this means. Let's see, but we'll take that as we go ahead. So coming to Chandru, so you've been a part of the technical working group drafting the sustainable finance regulations. For our benefit and as well as the benefit of the audience, can you please explain what the working group has been set up with and what is the objective?
Thank you, Sandeep, and a very interesting discussion. Thank you for actually posing that question to me. So yeah, I think it's an important step for actually India as far as the flow of sustainable finance grows, and it is essential to actually have regulations which are clear, so that it removes the ambiguity and sets certain boundary for actually investments to flow. And I think the purpose of regulations is also to reduce uncertainties and to actually bridge the trust deficit between various stakeholders. So with the view, with this view, the Government of India under the Ministry of Finance and Department of Economic Affairs, and with the UNDP as a coordination agency, this technical working groups were set up earlier in 2021. There are actually 4 working groups. One is regulations, the other is to do with taxonomy. We have resilience, and we have disclosures. These are the 4 actually technical working groups. And the members of this task force, they are drawn from various ministries, regulatory bodies, and from agencies and specialists involved in ESG, climate change, and sustainability. I am part of the regulatory working group. Now, the terms of reference of this task force has been to define the framework of sustainable finance for India and establish the pillars for the sustainable finance roadmap. So that is number 1. And then to develop an action plan for the implementation of the roadmap with clear timelines for short, medium, and long term. Also, the taxonomy is an important part, and because that is one which I mentioned, it kind of defines the boundaries and brings in clarity as to what is green. And there have been a lot of discussions around that. Also, because there are nuances with respect to India, as there would be nuances to when it comes to taxonomy related to other countries also. So this has been to suggest a draft taxonomy of various sustainable activities, and then to suggest a reporting framework, as far as the sustainability with sector-specific variations. Also, the other mandate has been to actually suggest a framework of risk assessment by the financial sector, and any other matter which will actually help in the promotion of sustainable financing in India, including technology, etc. Now, the working groups have met regularly, and we've discussed a number of areas in sync with the terms of the reference. And the report has now been submitted to the Ministry of Finance and Department of Economic Affairs, and we expect the draft report to be published for public comments in the Q1 of 2022. So this is the gist of the task force. As I said, there are a number of areas which have been discussed with respect to whether regulations or taxonomy, and also actually disclosures and resilience. It's quite a task, because we are also starting in a number of areas with first principles. How do you define certain things? And there have been a lot of discussions, because this is the foundation. And when you're laying the foundation, you need to be extra careful. But at the same time, these should not actually inhibit the flow of finance. Rather, they should ease and bridge the trust deficit between various stakeholders, which is extremely important. Otherwise, the flow of finance does not actually happen. So there have been actually a lot of discussions, and very productive discussions which has actually happened within the technical working groups and amongst the various other technical working groups. So we hope that this will actually lay a strong foundation as far as sustainable finance is concerned in India.
I see. That's very, very interesting, and let me wait to see the exposure drafts. As you said, they will come out in Q1 next year. So coming to a little bit of background of yours, where you've seen a lot of you've been in the credit markets for very, very long. So do you see a market in the credit lending side for green projects? I mean, there is some on the utility scale solar. I'm not referencing so much to them, but that's, as you know, green is not just utility scale solar. And where do you think this is the potential? What do we need to realize that potential? How do some financial institutions focus on that? What was your take on that, all this?
Oh, very good question, Sandeep. Thank you for asking me that. In this, I'm very much in sync with what actually Simi has mentioned. As far as the sectors are concerned, and which are the sectors which would be actually have got potential. So I do agree. A lot of focus has been on solar, and that is kind of been an impediment also for the actually flow of green finance to other segments, because that's been kind of overwhelming. Now, according to a study which we did, last year, it's still getting updated, but I think it will still be a kind of a good picture of what is the potential across India. So we commissioned one of the big four to actually do a study last year, and what we have done is actually as per the study, the potential for green finance by 2025 is around $215 billion. And just to once again to underline, the study is based on last year. It's getting revised, and we think the numbers will be higher than this. But as per the numbers of last year, it is around $215 billion only on the debt side. Equity side, we had actually calculated around $90 billion by 2025. Now, out of this, the bulk of it is actually kind of focused on the buildings and construction segment. That's around $150 billion. And within that, the rooftop solar projects are around $12 billion. And the energy efficiency projects are around $9 billion. After this, water management is the actually, it has around the potential of around $22.8 billion, within which, wastewater management is kind of 1/3 of that. And efficient water management is around $14.5 billion. Then comes waste management. And within that, we see biorenewables to be actually, taking a lot of weight and taking the bulk of this waste, management within that, followed by waste recycling, and then, waste to energy. And even though there has been actually a lot of talk about actually the transportation segment, and I think, this number will get revised substantially this year, because the last year's number we had was around $12.7 billion. I think, this will undergo a lot of revision and be substantially higher this year. But we've seen actually kind of the three-wheeler, the buses, and the two-wheeler segment within electric vehicles to be actually having a lot of potential. So it's kind of equal. So the buses, the passenger buses has been actually, one of the segments with high potential, followed by actually the three-wheeler segment and then the two-wheeler segment. I think within this, the two-wheeler segment probably will jump with the numbers, what we are working on for the current year and beyond. So this is the kind of, I would say, the potential, which we are actually seeing as far as, different sectors are concerned. But there are actually issues as to why these sectors are not actually, been moving up. And I will just kind of, mention a few of them. I think one is actually, as I think all of us have been discussing, it's been the intervention by financial institutions limited largely to the areas of renewable energy production. And in most cases, it's been the utility scale, which has been taking the bulk of the actually inflows. I think the second point, which we have seen is that the banks or NBFCs, which have been traditionally actually, financing all this kind of segments. There is still not, we still don't find a particular NBFC or bank which is focused on the green opportunities. Also, the skill sets which are required for these kind of things are not actually available. And I think the final thing is also, or the one more point which is important, is also the regulations part. There is not so much of clarity as far as regulations is concerned. And that has been one of the endeavors of the technical working groups to bring in actually clarity on certain things. And on the risk management side also, so whether it is when spotting opportunities, looking at opportunities, or when you're looking at on the risk management side, the technical skill sets to actually evaluate and to understand this market. These are still growing markets. And it is like a chicken and egg syndrome. Actually there be a critical mass, then we will fund, or the other thing is you fund, then there'll be a critical mass. So it's like a chicken and egg syndrome, which always happens with most established institutions. And I think probably the emergence of new types of actually, Simi mentioned about the climate tech or climate fintech kind of ways of actually financing can trigger off these kind of opportunities. And I'm sure that people are actually looking at it to take this and then build. And the other thing I would say is also the critical mass, which has been actually one is the critical mass, and whether you want to actually take a retail route or in B2B route when you're actually doing a funding. So if you're talking about on the retail segment where the margins would be higher, the critical mass currently exists only in rooftop solar. And also actually, then now being followed by probably the two-wheeler segment, electric two-wheeler and the three-wheeler electric vehicles. Now, the issues there have been actually, how do you actually value the end of life cycle of a two-wheeler? I think, that's been electric two-wheeler. That's been one of the bugging issues for actually many lenders. And on the rooftop solar, also there have been actually, I would say, experiments which have been done. But there are issues like, when it comes to default, how do you repossess? And the kind of, mechanism which is there on the rooftop. And what do you do with that? Is there a secondary market for something like that? So these are the issues I would say on the retail side. But again, I think one of the other things which people have been actually looking at it when it comes to actually financing retail two-wheel segment has been the issues with the recharging mechanisms or the recharging infrastructure. So one is the charging infrastructure where you can go and plug in, and then the battery swapping technology, which has actually been coming up. Now, there are actually a lot of competing technologies on this, and then the range anxieties, all those kind of things are there. But there are also, I would say that, benefits which are actually there in funding the two-wheeler segment, because more than anything, these are actually, these generate huge data, and that's much more valuable to actually organizations. And I do see that, some of this climate tech companies, looking at it from that perspective, and to look at, data and the other opportunities which can actually spring up from that, funding to actually this computer on wheels. Then I would say that the other issues which have been plaguing is the inadequate efforts, or rather inadequate mechanisms for risk sharing between technical and financial service providers. So that's been an issue, and you can also say that insufficient pooling mechanisms for mitigation of the risk. These are the other issues I would say which have been actually plaguing the growth of climate finance in India. But these are again, opportunities. I mean, if you don't have problems, you'll not have opportunities to solve. And these are actually good problems actually for institutions to come in and solve, because the way the demand is actually is there, it's actually increasing. Also, the offshore money wants to actually find at a reasonable cost. There is a lot of offshore money waiting to find shores in as far as this kind of lending is concerned. But what they require is more clarity on probably regulations, taxonomy, as well as actually on bridging the trust deficit. And that's where again, certifications and everything actually come in. So these are the other issues which actually crop up, when people are actually lending from overseas offshore into India. So the greenwashing issues are there. How do you actually tackle that so that people actually gain more confidence that whatever they're lending for the purpose is actually solved and it is not actually being diverted to somewhere else. So I would put it that these are the kind of major issues for the climate finance in India. But again, these are all great opportunities for people to look at and then solve. Thank you.
That was quite a comprehensive brief, Chandru. You covered so many areas and so many segments. So now coming, back to your, the first question which I posed to you about the working group and where are the markets. And since you have some idea of both, and I'm not asking you about, I mean, I know that you are not supposed to disclose what regulations are going to come in, but where do you see maybe in 2 years, with some kind of regulatory incentivization, what would you see some incentivization of flow of capital to the sustainable sectors?
Okay, no, so I do see one is we are seeing. I mean, you've shown in your graph itself that the growth of actually green bonds happening in India and the kind of other innovative structures which are happening. So these enabling mechanisms are getting actually into place. I would say the ecosystem is actually building up, and regulations and clarity on actually regulations is important, which I think by next year we should be actually having all this in place. And once that happens, and also with the actually one of the other things which we've been looking at is the IFSC, and whether funds can actually flow in via the IFSC and everything. And IFSC has been actually growing at a very fast clip, and a lot of people actually now setting up offices and entities in the IFSC. But that apart, IFSC or not, I think, despite that, we should actually see quite a rapid growth happening in India. And I think, I see within all these things, especially the, apart from the two-wheeler, I think, it's a no-brainer to say that the two-wheeler segment would actually start flourishing. And the teething issues, which are actually facing all these two-wheelers will actually move. But I'm also seeing, other things actually developing. So, there are actually this kind of entities which are pooling vehicles, electric vehicles, and providing actually these vehicles to actually larger firms for delivery and everything, like an Amazon, Flipkart, and, Farm Easy and all this kind of guys. So they are coming up, and then, they are actually doing this because these companies, the larger companies, the listed companies, have to reduce their scope 3 emission. So this becomes an important element for them to actually do that. So there are several ways in which actually this is coming up. And definitely, I think, the other thing, I would say, which would actually probably trigger off a better kind of flow of funds is also the use of technology and things like blockchains, especially actually for, capturing information and to prevent greenwashing and to actually, kind of enhancing the integrity, or rather, preserving the integrity of that information through blockchains and everything. And those kind of things would probably emerge, I would say, in the next year or two. And these will aid definitely the actually flow of funds and the growth of actually this sector in India. And, as I said, there are many actually sectors, which are kind of waiting in the wings to take off. And I'm sure people like Simi from the equity side are also actually working and looking at actually all these opportunities to start funding. One more thing, which I'm also seeing is the emergence of real climate tech companies. So important point has been that, for a lot of these things, the data availability and the, using this for verification of prediction has been missing. Now I'm actually seeing the emergence of these kind of companies, which are actually coming up in India, and also not only catering for the India, but also for the world. And wherein, a lot of these things are actually enabling mechanism. And the last part I would say is also the manpower, skilled manpower to actually, take all this thing up. So that is important. And I think, that is also actually, coming up with various people actually now interested in doing these kind of courses and coming into bringing ESG and sustainability into the mainstream, and whether it be in investments or in actually lending. And finally, I would just say one more thing, as far as lending is concerned, regulations are extremely important, and regulations from the Reserve Bank of India. RBI is actually joining the NGFS, or the Network for the Greening of the Financial System, earlier this year, is an important step, because that then brings more clarity to the capital allocation by lenders and how they need to either price the risk or, how they need to actually allocate the capital. And also the BI's committees working, which is actually in the making, should also bring in more clarity. So that will be an important aspect, I would say, as far as the sustainable finance, how I see in the next couple of years. Thank you.
Thanks, Chandru. So there's a common question, and for the three of us, I'll begin, basically just two wishes in terms of policy and regulation, policy or regulation. I will begin with mine. They are that one, there should be disclosure of climate risk on the balance sheet of, to start with, maybe top 50 NSE companies. That will bring in a lot of awareness of the risks and opportunities there, and therefore help in the flow of capital. And two, we talked about the lack of dedicated green capital. So therefore, I would wish that there should be a fund which is set up to invest in debt. As we know, equity money is flowing in debt, so that the debt and the bond market subsequently is stimulated. So I'll move on to Simi. What is, if you have to restrict yourself to two policy or regulation wishes, what would they be? And I'll come to Chandra after that.
Okay, so I think one, I would say the first one would be to just have clear policy, right? Because I think it's one thing to not have policy, but what's really hurt sectors like renewables, say rooftop solar, is policy flip-flops. And so I think having a clear direction and unanimous approach between states and center on what the policy is going to be, especially for assets where the returns are, say, 10 to 15 years, will give investors a lot of comfort that they are putting money into something that will continue to be supported, and they will know there won't be any subsequent policy changes that make it, make their investments unviable. So I think that's one. I think the other one really is, we need to make it easier for investors to bring money into India and take it out, right? Because I think given all the, hassles that exist today, I know there are multiple, routes that are permissible for FPI and VRR or whatnot, but it's complex. And if it's a non-VC investor, especially with issues around, angel tax that are partly solved, keeps coming back in our lives. I think we need to, I think it's less for policy direction, more of, policy communication, that we need to be an investor-friendly economy. And we are not always clear as a country that we are one. So we need to stop startups from headquartering in Singapore and London and Dubai and have more of them headquartered here. I think that's definitely a need.
Thanks. Chandru, moving on to you. Two wish lists from policy and regulation.
Yeah. See, one is, I would say that the growth of the solar sector in India has largely been because of the subsidies. And now, it has got actually legs of its own. So similarly, I would say that, either tax breaks or actually some kind of incentives to be provided for actually other kind of greening which is happening. We've seen actually that happening in the two-wheeler segment, but if that can be actually extended to other segments, that will be extremely helpful. And I'm sure that the taxonomy will help in that part. But the one other thing I would say is clearer regulations for actually lenders on the capital allocation part, and the development of the risk management norms for actually lenders on pricing the risk and everything. And the third, even though you asked me only for the two things, I would say the third thing would be actually trying to create enabling mechanisms for increasing the liquidity for actually all this kind of lending and probably equity. I mean, both equity and lending, both the sides of that. So this would be my actually wish list.
Thank you, both of you, Chandru and Simi, for being with me in this discussion. We are now open to quick question and answer sessions if if there are questions from the audience. Thank you again.
Thank you.
Thank you, Sandeep. Thank you, Simi.
Hello. Hi. Thank you. Thank you again. So we have some questions, and let me start with addressing a few of them. So what are the risks associated with the green bond, and how do investors look at it as an investment? Well, it is extremely similar to what is in a normal bond. There's hardly any difference. It's nearly the same. But what the market is doing now, especially in the West, it hasn't happened in India yet, is that there's a lot of capital which is dedicated to green causes. So this capital, which is dedicated to green causes, causes some extra demand for these green bonds. And often we are seeing that green bonds are getting placed at coupons which are slightly lower than what a normal bond of the similar tenure would be. Now you'll say that that's very difficult to determine. How do you know? So there have been some instances of similar bonds of the same tenure and the same rating, say the German government security or the Netherlands government security, of which can be compared like to like. And even we had a recent case of the government security of Russia, which was, as per some observers, placed at as low as 25 basis points lower than what the normal government security would have. So that's what. So investors' return point of view, I think I believe I've answered the question. And the next is, what are the incentives for the issuer for a green bond? And their certification cost. I think I somehow answered it in the answer to the last question. You have dedicated green capital which wants only green bonds. So if you take the case of Exim Bank of India, the green bond was oversubscribed 3.2 times, and they found out after the book closure that around 0.8 times came from dedicated green investors, and this was in 2015. I mean, now green capital has increased quite substantially now, and therefore, as per the Exim Bank CEO of that time, it allowed them to negotiate better and bring down the cost. So that is what is the advantage, and that is why you see, as I said, it's not there in India so much, but there you see most of the bond issuances offshore. More than 90% of the proceeds have been placed offshore in this. So here's another question about public transport being not green than EVs, which might be using electricity from coal after all. You have raised a very valid issue, and yes, I don't have the figures of gram CO2 per kilometer of each mode, of each time, but both are within acceptable limits. And more than that, globally, the grid is moving towards more and more renewable energy. As you know, India's 40% installed capacity is non-fossil fuel based now. So therefore, electricity is better. And even now, it is better than the IC engine, which runs on petrol. So thanks for these questions. What are some career opportunities for finance professionals in green bonds? Chandru, would you want to take that?
Yeah. Okay. Thank you, Sandeep. Thank you all for actually attending this session. So on the question on careers, there are actually, it's just actually beginning to boom. And I think, as we go forward, there are going to be actually many different paths and, careers which will be actually emerging. So as one is, of course, you can directly look at it as, how do you actually weld or merge the issue of ESG or climate change and sustainability into the finance field itself. So you have investments field, which again actually has got a lot of opportunities, right from the front end investments to the back end to the mid office, the risk management, and all this kind of things. Then you have on the lending side also, which I think there'll be actually quite a few opportunities which will be unfolding. And I would say that both on the marketing side as well as on the risk management side, and actually the process side and everything. Also, I see a lot of technology related actually opportunities, careers actually opening up in this entire segment of sustainability, climate change, and ESG. Apart from that, so this, when you're talking about sustainability, there is also carries related to impact. That's one. And then, there are the climate technologies themselves. This is not the software technology, but it is the climate technology. So there are actually a lot of things actually happening in that segment. And, I can just actually go on. There are a number of things, which people can do from climate engineering perspective. That is, bringing better products, which can actually, reduce the global warming. Also, there are actually careers coming up in water engineering. If you talk about resilience, there are many careers which are actually opening up there. And also in the fields like geoengineering. So these are actually basically, a lot of research is going on. How do you reduce global warming? And one of the examples of geoengineering is people are thinking about actually spraying a kind of molecules in the atmosphere to reduce actually global warming. Apart from that, if you actually, you have also in waste management, circularity, bringing in new products, biodiversity is actually, going to be a very big career, I would say. In fact, there are actually asset management companies in, I've seen in UK, which are only dedicated to actually, putting up investments in, private forest areas and private biodiversity and everything. So I've recently seen a asset management company having around $5.4 billion worth of assets in private forest. Then you will actually have in trading, especially carbon credits, certification, consultancy, and the list can keep going on, Sandeep. So there is actually enough and more career opportunities.
Yeah. I now remember that around 3 months ago, I did a podcast on this. It was a half-an-hour podcast on this. So I'm so glad you could summarize it in 5 minutes. So I mean, if you can search, there's something run by some professionals called Green Guru, and there's a podcast. So you can have if you have half an hour to go through, then you can go through that. Thanks a lot, Chandru. Now, there's another question from Meera is about greenwashing is a worry, and many have, we have seen greenwashing around. How real is the worry, especially if the market grows in India?
Yeah, see, greenwashing is a worry, even now. And there is actually, one of the reasons that, the flow of funds also do not happen is because of the greenwashing worries. But let me also tell you that, various technologies are actually, catching up very quickly to actually, how to prevent greenwashing and verifying, about actually the disclosures which are made by companies. So that is one. Okay, when it comes to greenwashing, again, one common understanding about greenwashing is the disclosures. So that the companies do not actually disclosures properly, or they actually kind of the disclosures are painting a very rosy picture. But that apart, when it comes to the debt side, I think one worry is also about, when you're talking about subtle variation of greenwashing is the, diversion of funds to actually different kind of projects, to which it is not actually meant for. So if a fund is actually supposed to be going in for a particular green project, so it can get diverted into some other project. So that is one kind of worry. But the larger worry is actually for on the investment side is more about actually, companies or actually other kind of entities which are disclosing information that they are actually, kind of over engineering that part. So these things can now be actually, kind of triangulated with the help of technology. And that's where, I also actually mentioned about blockchains coming up. So I do see the emergence of blockchains on one side, but also on the other side, I am actually aware of at least one company in India, which is actually aiming to go global on actually climate data. So it's called Blue Sky Analytics, and these companies like Blue Sky Analytics, they are actually experts in doing a grid-by-grid verification of the emissions, carbon emissions and the greenhouse gas emissions, as well as the water mapping in that area, and also on things like forest fires and other kind of things. So so using that, you are actually having a temporal and spatial data. So companies can, asset managers and investors and other kind of even regulators can actually use this data to actually check greenwashing. So there are a number of things actually happening, but it's a real worry, and it will be growing. But at the same time, I would say that technology is also catching up, and that's probably an opportunity for technology companies also to look at.
Yeah, thanks, Chandru. I'm tempted to add a little bit is that setting up of standards about what exactly is green, because there are many activities
Taxonomy.
which are there. So the work that you did, and the work which Climate Bonds Initiative does in creating the standards, and we created the first taxonomy on Earth in 2012. Now, many countries are creating these taxonomies about what is green in their context. So those definitions are important, and similarity of those definitions globally will lead to better capital flow. So thanks again. So again, there's a question which I think, Chandru, you're best positioned to answer from. I'm not sure from whom it is. What do you see as the key drivers of ESG risk and regulation, especially for smaller companies, climate tech companies, in the coming 2 years?
Okay. See, I think, if you're talking about actually smaller companies, I'm not able to get the question very clearly, because it says,
I think you can take it as regulations all across. It's not necessarily for smaller companies.
Yeah. So one is, of course, so we are actually seeing the emergence probably, which will be actually happening as far as in 2 ways. I would say one is from the central bank, which, since it has actually joined the NGFS, there could be actually certain regulations, which might be coming up. But primarily on the lending side, there are 2 types. One is how do you price the risk, and how do you actually provide for capital after you have lent, based upon where the risk is actually moving. So this would actually kind of push lenders to take cognizance of actually climate risk and how they're affecting companies' top line and bottom line. And there you have the techniques like stress testing, which are actually also prescribed by the Bank of England, and which would then probably get captured through either through the NGFS or through what the Basel Committee is working on as far as climate risk is concerned. So, and what happens then is that, you get better pricing or higher pricing for actually companies which are on the higher spectrum of actually climate risk. So that is the way I would say that, that would actually affect companies, whether it is small or large. But the other way, if it is a very small company also, even if it's not listed and everything, it comes through the supply chain. So through the supply chain, companies would have to actually, even whether they are small or big, they need to actually pull up the socks as far as, climate change is concerned. Or, whether you're talking about climate change or, the other kind of risk, whether it's social or governance and everything. But as far as climate tech companies are they're considered, I think these are opportunities for climate tech companies. So what happens is when there are actually tighter regulations or tighter risk measures, so you would actually probably get these companies used more and more for either verification or for prediction. So verification of the data which is being actually issued, and prediction of the risks which are actually, which can actually manifest in different forms. And it is not just in the investment side. So whether it is in supply chain or manufacturing, so there are actually any number, or for insurance. So there are any number of, use cases for climate tech companies to actually, come up and then, have a greater role as far as the risks are concerned. So either in prediction of risk or in management of risk. I hope that answers the question, Sandeep.
Yeah, I think so. There's a question, I think this one I would try to answer. Would investor likely to get a lower return in green investment? And if so, should the government have a compensatory mechanism in place for green investors? So it is not designed as so that investors should have a lower return, but low return for the same risk and same tenure and all that, ceteris paribus. But what is happening in the West is that there is more capital chasing green assets than, say, non-green assets, and therefore they are getting a lower return. Now that is a market mechanism. First of all, it's a bit difficult to precisely measure how much less it is. It's because of the green tag, and therefore for anybody to compensate, even if they want to, is quite difficult. If you ask me, then my opinion is no, this is the market. If the market has come to a situation due to a variety of reasons where there is more assets being chased, that is what we want, because that is what will lead to mitigation and adaptation of climate change. That's what is necessary. So there shouldn't be anybody trying to compensate anyone, is at least my particular opinion. And then next one by Raj Thana is, how can one participate and contribute in development of green bonds, equities, how to take advantage of the trend? Well, I think Chandru gave a lot of examples of what can careers be and how things will go. So you might just want to pick on one of them, find a career which is into one of them, and therefore take advantage of the growth in the trend. That another question is that the investments in green bond will always lead to investor compromising on financial returns? And if that case, okay, sorry, this is I think a repeat question, sorry. Yeah, so that is all in terms of the Q&A session. Thanks a lot for so many questions. Thanks a lot for your participation. Anything, Chandru, which you would want to mention as a closing remark?
I think, we have actually spoken about a lot of things. This is an exciting area. A lot of focus has been there on the investment side, as far as whether it is ESG or on actually climate change. But I do see that, there is a huge opportunity waiting to be tapped as far as on the lending side is concerned, or on the debt side is concerned, not just in India, across the world. So, with so many other things happening, and with the focus actually being a lot from the government side also. And that, I think, is one thing, which everybody has to be cognizant about, is what is the focus of the government? So whether it is from actually climate change, and related to that is NDC, and what is the actually focus of investors, as far as actually foreign institutional investors or local investors are concerned. So these give actually a lot of information for everyone to act upon, whether it is actually they want to be an entrepreneur, they're working for a company, or want to actually take up careers. So it's really exciting times, and I think I wish everyone all the best in their careers and as far as their entrepreneurship is concerned. Thank you.
Exciting times indeed. Such an appropriate closing remark. On behalf of the panel, I would like to thank the organizers of the CFA Society India, and also the organizers who have done the necessary to make sure that this works technically perfectly. The amount of hard work you have put in is amazing. Thanks a lot for this, and see you next time.
Thank you. Thank you all. Thank you.
Thank you, Sandeep. Thank you, Chandru, and thank you, Simi, for a brilliant discussion on green bonds. Cleared up a lot of, most of us being generalists, this was an eye-opener for a lot of us. Thoroughly enjoyed it.